Good evening. There has been talk of a V-shaped recovery in the Indian economy, but there seems to be no V-shaped recovery as far as we can see. What is happening is company after company has missed what was its targets in terms of profits and turnover. I am talking about companies which are in the FMCG sector. Of the companies that have declared result, three companies which normally do very well have struggled. Hindustan Uni Lever's profits compared to last year have narrowed, and so has turnover on a Q to Q basis. Nestle India's both profits and turnovers has reduced in this quarter. The latest results show that even Brittania, when you compare it on year, its profits are down. Last year, this time, Britannia's results show that first quarter of last year, Britannia made a profit of 540 crores in spite of there being a severe lockdown. In the second wave, April, May, June quarter, they have posted a net profit which is 29% less than last year. But sequentially, when you compare it between April, JFM and April, May, June, profits are slightly up. But overall, it is very clear that profits are struggling. Also, the manager Varun Berry said localized lockdowns in some states have affected the rise of turnover badly. Also, they are facing enormous pressures from the rising price of palm oil and crude, which in turn makes input costs of biscuits go up. Also, flour and sugar prices have moved up. This makes the cost of making Britannia biscuits more costlier. In this, since it's a highly competitive business, margins are very thin. So, Varun Bari claims what they have done is they have cut the costs and done more efficiency in cost management, thus improving cash flows and making higher margins. But overall, the market for consumer goods has done badly. Here we are talking about companies like Hindustan Uni Lever and Britannia and Nestle, which produce goods that people eat regularly, and there is supposed to be inelastic demand. Even in food products of these companies, there has been no big growth in sales because of the problems in the domestic first quarter due to the second wave of the pandemic. Hindustan Unilever says that high cost inflation means will make navigating 2 quarters very difficult. Hindustan Unilever does not expect it to have good growth in the coming 2 quarters as the pandemic begins to ease. In spite of that, higher food prices, higher palm oil, higher crude prices will make it very difficult for these companies to make profits. Also, another lead indicator, that is Tata Motors and Maruti's profit numbers are out. Maruti's profits have enormously declined because of the suffering in the second quarter sales. Tata Motors has posted a big loss in the first quarter, primarily due to the fact that semiconductor chips are not available for making their marquee JLR product. All car owners are suffering from a lack of chips, which has made life very difficult, along with the slowing down of the Indian economy has meant there is contraction in demand and also production outages because of non-availability of semiconductor chips. This means that the vehicles to the automobile sector, especially the four-wheeler, passenger and the LCV, HCV segment has done badly. This means two big sectors which drive the market. That is, one is fast moving consumer good companies like ITC, Hindustan Unilever, and Britannia have posted lesser than expected numbers, and the fact that even Maruti has found it very difficult to sell cars, and coupled with the non availability of semiconductors putting pressure on companies like Tata Motors and car companies all over the world means that auto industry is going to have a tough time. The tourism industry, there is nothing much to write home about, as lockdowns meant that even an industry which just opened up recently and had some hope of recovery has collapsed. So, overall, these are tough times for the industry, and I do not know from where growth will come. I do not believe the optimistic projections of the government. Even IMF, which projected that India will grow at 12.5% to reach pre pandemic levels in its economy, has turned cautious and has now downgraded its projection to 9.5%. It is very unlikely that we will reach that 9.5% target. In fact, we will continue to struggle to grow. The first quarter growth will be a big number because we had a complete national lockdown in the first quarter of last year, whereas we have had 1 year regional lockdowns in the first quarter of this year. Therefore, one can expect a big growth number, but that is primarily because in the first quarter, in the previous quarter of last year, we had a negative growth of minus 24%. As the year goes along, you will find that this growth will taper out, and finally, we will be lucky to get a 7 to 8% growth on a decline of nearly 10% last year. So, the increase in GDP this year will make sure that we are still behind the GDP level of 1920 unless the government decides to change its policies and empower the real poor by cash transfers and other subsidies. There is no hope of this economy recovering. I am not the one saying this. It is also clear that even Mukesh Ambani, India's wealthiest man, has recently said, unless those in the bottom of the pyramid are encouraged, there is no possibility of this economy recovering. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.